Welcome, Main Street stock investors, to Market Talk Monday on the Paul Mampilly YouTube channel, home of Bold Profit Strong Hands Nation. I'm Amber Lancaster. Thank you so much for tuning in. Today, Paul is joining us to give his take on President Biden's $2 trillion infrastructure spending plan, officially known as the American Jobs Plan, and what it may mean for your America 2.0 stocks. Plus, he'll answer some great questions that we received via our Bold Profits email inbox and Twitter. Plus, I'll share how you can play the America 2.0 boom with Paul's Extreme Fortune stock trading service that actually aims to capture gains as much as 1,000% in our America 2.0 megatrends like the Internet of Things, artificial intelligence, and of course, new energy. And by investing in just small cap companies before they just take off, this service has that in spades. So click the strong hands icon over my shoulder to learn more. So hello, Paul. So good to see you as always. Thank you so much for being here.
Thanks, Amber. Thank you for having me on again.
Yes.
Market Talk has blossomed, getting thousands and thousands of views per day. Congratulations. Well done.
Thank
I
you.
know you have worked incredibly hard and you deserve all of this attention. So well done. And of course, I have to say hi to Alex back there. Hey, buddy, how are you?
Alex.
Just so that everyone that is not a Profits Unlimited subscriber knows, Alex stars on our Profits Unlimited weekly updates. Sometimes he even pipes up to defend me, which I really appreciate. Hopefully, I will not be needing your help today, Alex. It should be all right.
No, you're good.
All right. Well, however, we do have an agenda for this week, so I'm just going to let you take it away, Amber.
Of course. So first off, Paul, we have several questions across a few categories. The first category we have is about infrastructure, the Biden infrastructure spending plan. And before we begin, I do have a graphic that I like to put up on the screen. Our team will have it put up for us.
Okay.
And it really just lays out how the monies are allocated for this particular plan, where they may be going. And overall, it just shows that $650 billion will be allocated to the infrastructure at home, which means just for electrical infrastructure, high-speed broadband, etc. $621 billion is for the transportation infrastructure, which is really right up our alley here, Paul, with $174 billion going toward electric vehicles. And the last two allocations are $580 billion for research and development, as well as workforce development and manufacturing, which just plays into the 3 R's forecast for you, Paul, and $400 billion for the caretaking economy, because our most valued citizens are really our elderly. So it's money allocated for elderly and as well as disabled people. So that's how it lays out for now, before it goes through any changes through Congress.
Right. Just looking at that, and the moment it was announced, Amber, what I felt that this was our version of, in some ways, the New Deal. The New Deal, for those of you who are unaware, this is what President Roosevelt post the Great Depression introduced, and it built America in the model, if you will, of the Industrial Revolution. It's what generated the roads and created the infrastructure for the booms that then followed all the way until now. And I believe that this is like the digital New Deal. This is the fourth industrial revolution New Deal. This is the America 2.0 New Deal. And when I look at it, and you gave me this chart before I got on, so you think about, people will say, well, Paul, tell me, how can 111 billion on clean drinking water, how is that anything to do with the fourth industrial revolution, America 2.0? Well, one of the things that we've been telling you, which is that the Internet of Things means that you would have internet connected pipes. In other words, sensors in every single part on all the pumps. It means that you can now use artificial intelligence to determine how much water is needed where. In other words, much more efficient allocation of the actual resource, much easier maintenance of the infrastructure. So you have fewer big breaks, water breaks, which, if you lived in New York or in any city, there's always that. Imagine that you can actually anticipate all of that and actually go ahead and address it before it actually happens. For that, however, you have to have upgraded digital infrastructure in place. And so, of course, as they go to put in new infrastructure, they are not going to put old-fashioned pipes. They're going to put new digital infrastructure in place. And you can use that same way of thinking for whether it be broadband or electrical infrastructure or for housing or for transportation or for bridges. That same thinking, the new infrastructure that is going to be put in as a result of this plan is going to be digital. It's going to be associated with the fourth industrial revolution. And it is going to pave the way for us to be able to do so many things more easily. And one of the things that many people I know are interested in, for example, Amber, like connected cars.
Oh, yeah.
We need slightly better upgraded roads. I know for myself that my most nervous times, Amber, when I'm in the Tesla and it's on autopilot, is when the lines are poorly drawn. And now the car skitters around because it's unclear as to which line it should follow, because the cameras and the sensors work together to try and determine it based on the information that it's getting. So a lot of the new infrastructure that President Biden has announced under this plan, and I know it's going to change, nonetheless, the basic direction is a good one. The basic direction is something that is going to make us into a society that is upgraded for where we are going and where other parts of our society are. We can today use this phone and get all kinds of things, all kinds of information, all kinds of data. We need to have that for our entire world, our entire country, our public infrastructure, our private infrastructure, our homes. And this spending will help facilitate it. And I know, Amber, many people will be aghast. Oh my God, Paul, public spending, debt, there's going to be massive inflation. I disagree, Amber, I disagree. I believe that this spending is needed. It's actually been something like 30 or 40 years in the making. Pretty much every single administration that I can remember, probably pretty much since Bill Clinton on, has promised an infrastructure rebuild. And we could never get it together as a country to actually agree on what were the priorities, where should we spend it, how should we spend it. And now there's a really good reason to spend it. And the reason to spend it are megatrends that we have been invested in at bold profits now for nearly 5 years. So Internet of Things, absolutely, you bet. Every single aspect of this infrastructure plan means a ton of new chips are going to go into place. You're going to have more servers. You're going to have a huge amount of digital infrastructure to support all of this. That's the Internet of Things. Artificial intelligence, all that data is going to be eventually parsed and made into information. That's artificial intelligence. All of these assets will be tagged. And how will they be tagged? With blockchain, because that is the technology of our time to determine ownership. So you can see that while many people may object and disbelieve in it, I believe that this is an investment that is worthwhile. It's an investment in us. It's an investment in our future. And I believe it is going to set up, just like the New Deal did in the past, set us up for prosperity and boom. And I believe that a lot of this money, and there will always be waste in some amount of government spending. There's waste in everything, in truth. But however, I believe the vast majority of it is going to help us become more productive, more useful, and genuinely give us more of what we want in our lives, which I believe is happiness and joy and pleasure. So that's my take on the infrastructure plan. When I heard about it, I'm like, yes, absolutely, yes, this is exactly what we need. This is the right time to do it. So I believe this is going to be a good thing. And I believe that all of our companies that are involved in this are going to benefit from this. And as a result, you know what the usual thing is that people seeing this will say, well, I wonder who is going to benefit, and people will start to work it out and they will start to bring their money and start to bid our companies higher. So I am bullish, optimistic, positive on this infrastructure plan and what it means for the fourth industrial revolution in the United States of America and America 2.0, Amber.
Well said, Paul. And I have to say, we have some questions that did come in through our mailbag, through the
Okay.
email inbox, and you answered, I think, quite well the first couple of questions we received from Byron, who's a subscriber and also follows us on Twitter. Hello, Byron, and Gail. They had some similar questions about which megatrends in our portfolios actually would respond positively to the spending plan, and I believe you've already touched on that. Am I wrong in saying that?
Right. The mega trends are going to be obviously Internet of Things in a very, very big, meaningful, and visible way. You are
Mm-hmm.
going to see pretty much all public infrastructure get connected to the internet.
Mm-hmm.
And the benefits of that are huge. Lower maintenance, lower expenses, in general, less work for more productivity
Mm-hmm.
because of the utilization of the Internet of Things, which then very rapidly leads to artificial intelligence. So those are the most obvious places. However, any of these kinds of investments also are going to allow for generally more productivity and efficiency, which means that we can start to transition away from carbon-based energy faster to new energy. We can
Mm-hmm.
start to implement the promise of precision medicine, which is in its very early stage, because while people say, well, this is a huge cost, Amber, the truth is that you have to invest to get something.
Right.
The benefits of doing anything only come after you invest in it.
Mm-hmm.
So once we make these investments, we will actually start to save money as a result of having spent this money up front. And now we will actually be able to take all the excess productivity that we get from it, all the excess efficiency, and start to really put it into our healthcare system where we spent this massive amount of money, and yet we don't have better healthcare than a lot of other countries that spend less. So this is going to create the impetus and actually the resources for us to transition to new energy, to transition to precision medicine, and give us extra resources to spend on new industries that are going to require a lot of resources, like space, for example.
Oh,
So it really is going to affect pretty much all of the things that we are generally already invested in, and also bring to bear new technologies. As we go to implement this, we're going to use 3D printing. We are going to use photonics. We are going to use all of the things that we tell you about week after week in Profits Unlimited. So I am, as I say, very bullish, optimistic, positive on this infrastructure plan and what it means for obviously our stocks, for our country, and for our economy, Amber.
wonderful. Well said, Paul. So if you're up to it, I have just a few more questions that came in.
Of course.
I like to switch gears a little bit towards cryptocurrencies. That's always a hot topic.
All
And
right.
we have a few from Chris K. Chris K is wondering how to research a crypto to know exactly what it does, what is its market cap, and how can they be owned without a digital wallet.
The last question is easy. You cannot own cryptocurrency without a digital wallet.
Mm-hmm.
In Profits Unlimited, which is our flagship service, that there'll be a link for it down there. Just quick plug for Profits Unlimited.
Mm-hmm.
Um, we guide people to use the easiest two services in our judgment and experience to use, which is Robinhood and Coinbase. I understand that Venmo and PayPal are going to offer or have begun to offer this as well. They make it easy so you are you have no idea what kind of wallet you're using. You just end up buying it and they store it for you. And the Cash App as well does that, but only for Bitcoin. So the last one is pretty easy. You kind of have to have a digital wallet to own a cryptocurrency. You can own tracking stocks, and we own tracking stocks in Profits Unlimited for Bitcoin and Ethereum. However, they have their own issues, which Amber and I are all too familiar with. And if you're in Profits Unlimited, you're all too familiar with, which is that sometimes they don't track the underlying cryptocurrency in real time. They trade at a discount, they trade at a premium. They're not available everywhere. So that's a problem associated with tracking stocks. And yet, thus far, we have no Bitcoin ETF in the United States. There is one in Canada. There is no Ethereum ETF in the United States. So these trackers are all that are available. Now, with respect to what a cryptocurrency does, You can simply use Google and type in the name of the cryptocurrency. Any good cryptocurrency is usually based on what's called a white paper, which lays out its technical specifications, what they're trying to do. And the market capitalization of a cryptocurrency is usually available quite easily. You can go to a website called coinmarketcap.com. They are the place where I use to track the market capitalization of these cryptocurrencies. So hopefully that gives you the answer to those questions.
Very good answer, Paul. We have one other question on crypto. Actually, it's regarding the new, what we all talk about lately is the non-fungible tokens. So Kyle from Allen, Texas wants to know why NFTs, the non-fungible tokens, have become so popular all of a sudden. Is there a realistic way to profit from them other than selling the meme for millions of dollars? I know this is somehow connected to the decentralization trends that we have seen with cryptocurrencies, but from what I've seen, NFTs simply seem to be used to build brand loyalty and for rewards programs for loyal fans and followers. So are we BOP on NFTs, Paul?
NFTs are something where an application of cryptocurrencies to art and things that have a scarcity value based on ownership. So if you think about it, in the past, if you owned a very rare painting or a very rare baseball card, there was no way to really guarantee that you had the only one. Mm-hmm. Using cryptocurrency, using blockchain, you can actually put a identifier on it that makes it super unique. And now if you buy it, you know for a fact with no uncertainty at all that's there. And that's one of the things that is now being used. It's an application of cryptocurrencies, an application of decentralized finance, if you will, to now use this for art and any number of things where scarcity is the basis of its value. Mm. And so if you apply cryptocurrency to these things, you can take away some of the doubt, you can take away some of the uncertainty, and that's the application. Now, as to whether or not this is going to dominate the world of crypto, I believe that a good way of thinking about this is to think that the size of the art world within the economy is somewhat small, and cryptocurrencies will probably expand the value of art to some extent, because some of art is destroyed by the fact of plagiarism or copying or faking. However, the mapping of NFTs, I believe, will assign itself around what the analog world has with art and these objects of scarcity. And there are a number of platforms that are solely dedicated to NFTs. And I'm certain that some number of them will do well, no different than the art world is dominated by Tiffany's and Sotheby's, and I'm certain that in the crypto world over the next 3, 5, 7 years, 1 or 2 or 3 of these platforms will end up dominating, getting all the volume, and the folks making NFTs will start to sell it on those platforms and they will do well. However, it's a piece of the crypto and DeFi world rather than something that is all encompassing of it. It's simply a piece of it.
Okay, Paul. So moving on to our next set of questions regarding new energy. We've talked about new energy a little bit as one of our megatrends so far today. Jesse B is a subscriber to Profits Unlimited and is very happy and grateful for the service that you provide. But Jesse is wondering whether you have an opinion on wind energy, in particular the wind energy ETF, TAN.
We actually had TAN, which is the Invesco Solar ETF. It had wind assets, it had batteries in there. We had it as part of our STIX acronym ETF for a while. Mm-hmm. However, for some period of time, we did see this part of the stock market really start to price in a lot of excitement, a lot of good news that was both ahead of the technology and ahead of the business that they actually had. Mm-hmm. And so we terminated STIX earlier this year. And I believe that we're going to go through a process where some of the people that bought very enthusiastically at very enthusiastic prices will probably need to get washed out of it because they are going to represent excess supply. In other words, every time they go to sell, the buyers are going to step away. So it's going to be hard to get a price rise from these stocks. So we are going to watch and wait and determine good points for us to add more new energy stocks to our various services. For now, I'm just watching and waiting to see if some of that enthusiasm premium that sometimes can come into very good ideas all at once, because people get super excited and they sort of disconnect from the fact that these stocks still have to represent businesses. They still have to get the next buyer to come in who wants to pay a higher price. And generally speaking, that's because of something that says to that next buyer that there's a sustainable business here that can grow. So I am still absolutely bullish, optimistic, positive on new energy. Nonetheless, there are always waves of movements in all of these megatrends. And there are moments where you want to start to buy more, and there are sometimes moments when we just take our time to watch. And I believe for right now, we're just going to watch and see if some of the more enthusiastic buyers have sold out before coming back in, so that we are positioned really to get gains.
Okay. So Paul, Blue Water from Twitter wants to know your thoughts on ESGs, their environmental, social, and corporate governance scores that companies are now using to that will impact investing in our investments. Do you have an opinion on ESGs by any chance?
ESG is something that has been in development really for 20 years now. Many people may only be hearing about it. However, I can even remember, Amber, when I was managing money, where this question started to come at us. And in truth, to me, ESG is today a little bit like normal investing. At one point in time, investing in new energy, which was called alternative energy, sustainable energy, was considered ESG. Today, to me, it's just considered regular investing. It's considered common sense investing. In other words, you invest alongside with your values, your principles, your beliefs of what the world that you want to live in. I believe that generally speaking, that is something that we sort of naturally do in Profits Unlimited, really pretty much have done from the very beginning. And there is a term for it because it's now essentially becoming a term that maybe the very big money managers, Amber, like BlackRock and others, who have very large investments in legacy technologies, legacy companies, legacy industries like carbon-based industries, for them, this is something that they would need to pay attention to. And from our perspective, ESG is another way really of saying fourth industrial revolution, another way of saying America 2.0. I mean, these are all the same places, same companies, industries, sectors that we are already invested in. So for us, it's a net positive if the rest of the world goes to ESG, because it's another way of really getting people to invest into America 2.0.
Great, Paul. So our last set of questions are on investing in general. Lewis is a new investor and wants to know what is the least amount of money that he should consider investing or in recommended stocks.
Right. There's no least amount of money you can recommend, Amber, into let's say if we're taking the Profits Unlimited portfolio, Amber, there is something like 37 stocks in the Profits Unlimited portfolio when I last checked. You mentioned Extreme Fortunes, which is our small cap service. We look to buy companies that are sort of 5 billion and under. So these are very small companies relative to a world where Apple is a $2 trillion company, $2 trillion company. So much, much, much bigger. In that portfolio, we have something like 40, maybe 42 companies like that. You could start with as little as $100 per company. We, of course, recommend that people follow the rules of the game and equal weight, because one thing that's absolutely 100% guaranteed is that the stocks are going to be volatile. So you need a portfolio. And so it's important that however small you start with, you still have to aspire to build a portfolio, because otherwise what happens is that you get shaken out. There's going to be volatility. We had a March crash. We just had whatever you want to call it, a reaction or correction that freaked a lot of people who thought that stock markets were just going to keep rising relentlessly, uninterrupted, week after week, month after month. And that is never going to happen. Even in an extraordinary, phenomenal bull market like what we are in for, which is in for fourth industrial revolution stocks, America 2.0 stocks, there are still going to be moments when there are more sellers than buyers. And when that happens, you are going to see prices get bid down. And what happens into any of these moments is that the buyers step away. When they see a masses of selling and they see a lot of stock being put up for sale, they know, they're not stupid. Prices are going to be going down. They're like, I'm going to wait until it's cheaper. And when the selling is done, the buyers test the market, come back in. So you want to position yourself to actually succeed. And for that, you need a portfolio. So whether you start with $50, $100, your goal should be to implement our rules of the game and own a portfolio so you can actually get the benefit, say in Extreme Fortunes, which is the service you mentioned, Amber, of trying to actually get that 1,000%. And just to go on a little bit more about this, Amber, we had Plug Power, which is actually a new energy stock where we actually made the 1,000%. So I believe our recorded gain on that was 1,100 something percent. However, in between, Plug Power crashed multiple times by 20, 30, even 40%, maybe even once by 50%. So in other words, if you only held one stock and it wasn't Plug Power, you end up missing out. If you held Plug Power as one or two stocks and you panicked because of the price, well, and you sold, well, you end up missing out. By building a portfolio, it allows you to endure through these volatile movements, and then where you can get the benefit of a 1,000% move. So the long answer to a short question is that you can start with any amount of money today because commissions are free. It's never been easier to open up an account. There's no account minimums. I think Robinhood, there's absolutely no minimum. So I would tell you your goal should be to try and build a portfolio so you can actually get the benefit of actually being in those really stocks that can really change your life, like the ones we have in Extreme Fortunes. All right, Amber, let's go to the next one.
Sure. We have a Chris, a follower who from Europe, and Chris asks, what do you feel are the prospects for the EU and the UK-based companies over the next 6 to 12 months?
Right. I would love to give opinions on all these things. However, I have to be very truthful, Amber, which is that we focus truthfully nearly 99%, maybe 99.5%, okay, 99.8% on US companies. And that's what is our focus. And I'm certain that there are better channels who are much more focused, that are much better informed, that focus on that would give you a better answer. I believe that I best serve you rather than giving you a sort of unresearched, uneducated opinion to tell you that what we're good at is growth stocks. What we're good at is the US market. What we're good at is the fourth industrial revolution. That's who we make our stuff for. And that's where we can offer you really the best of us. And rather than trying to answer a question that I know something about, however, to give you an uninformed opinion, I would say this question is probably directed at other folks that focus on this and that really know their stuff about it. So not trying to get away from answering it, just pointing to what we're actually good at. And those are the things I believe that you should pay attention to us on.
I love that. Good answer, Paul. And I have to share some feedback that we received. This is from Gloria. So Gloria wrote us and she said, hi, Paul, Amber, and Ian, the rest of the amazing team. I would like to commend you guys for all that you do to open the door for regular folks to experience financial freedom. I reside in Fort Lauderdale, Florida. I am a member of Profits Unlimited, and I'm getting ready to join Extreme Fortunes. I have made tremendous gains in Profits Limited in stocks like CGC, AMD, and my favorite, Tesla. And I'm trying to abide by the rules of the game by having a number of stocks that you suggest in my portfolio. And of course, I am a Strong Hands investor and I'm proud to be part of the Strong Hands Nation. And before I forget, I want to thank my friend for recommending your service. So once again, thanks for all that you do, Gloria.
Well, we thank Amber and I and our amazing, phenomenal, incredible team. I know I say that and people's like, oh, this guy must be just BSing. No, our team is truthfully amazing. Yes. Absolutely phenomenal, wonderful, beautiful people, phenomenal. Thank you so much for allowing us to serve you. It is our privilege and our pleasure, and we're thrilled thrilled to the bone to see you make money. That is ultimately our goal, to put opportunities in front of you, to engage you, entertain, inform, and also provide investments that we hope you will use and that you will ultimately profit from.
Definitely. So well said, Paul. Well, Paul, I want to thank you so much for coming in today and joining us on Market Talk Monday. We've learned quite a bit as per usual, so thank you.
Thank you, Amber. Thank you so much for having me on.
You're welcome. See you soon.
Bye. Thank you.
And again, I want to thank Paul for joining us today on Market Talk Monday. It's always good to have him on. And a big thank you to you, Bold Profits Nation, for submitting such great questions. We couldn't do it without you. It's because of you that we are inspired to do what we do. It's your strength, your tenacity, your grit, are just prime examples as to why you're our heroes. So with that, please remember, if you're not a Bold Profits family member yet, to click the subscribe button to get instant video alerts for this channel, the Paul Mampilly YouTube channel. Also visit us at boldprofitsdaily.com to sign up to receive our free investment e-letter delivered right to your email inbox. And to wrap up, I just want you to check out this recent jobs chart from March. It shows that the U.S. jobs rebound is roaring. The U.S. unemployment rate dropped to 6%, while employers added the most jobs in 7 months. So economists were expecting 660,000 jobs to be added, but 916,000 jobs were added, beating all expectations. So this is a positive number that shows we're headed in the right direction. So it's all about jobs, millennial and Generation Z household formations, technology innovation, and our America 2.0 mega trends like 3D printing, Internet of Things, and new energy that are all laying the groundwork for big investing opportunities ahead. So as I mentioned earlier, if you want in on these stock investing opportunities of the America 2.0 boom, well, please consider joining subscribing to Paul's Extreme Fortune Stock Trading Service. So this service aims to capture gains as much as 1,000% in our America 2.0 megatrends by investing in small cap companies before they take off to the stratosphere. So please click the strong hands icon over my shoulder right here to learn more. So finally, turning toward the U.S. economic calendar week ahead, there will be just three major economic releases this week. On Wednesday, February's trade balance will post at 8:30 a.m. And on Friday, March's PPI final demand month over month and February's final print for wholesale inventories month over month will post at 8:30 a.m. and 10 a.m. respectively. And remember that you can follow Paul and me on Twitter at Mampilly Guru and at A Lancaster Guru. I do aim to post our BOP, hashtag BOP, bullish optimistic take on most of these economic events and releases throughout the week. So until next time, everyone, thank you so much for tuning in. We wish you a healthy and safe week ahead. And until next time, take care.